You are watching Market Watch, the brief overview of the key events from the world of finance. If you take any textbook on macroeconomics, and even more so the specialized literature on financial markets, you will easily find information there that a significant increase in the key interest rate leads to a slowdown in the economy, which in turn contributes to the weakening of the stock market. Recall that the Federal Reserve began raising the interest rate in March 2022, the amount of which increased 22 times in just 11 increases, reaching the maximum level in more than 20 years. Knowing this information, it can be assumed that the key stock indexes have declined significantly over the analyzed period, but of course this is not the case. During the first 3 quarters of 2022, there was a noticeable deterioration in sentiment in the US stock market, because at that moment investors did not yet know that they could play by completely different rules, and perhaps even without rules. Indeed, from October 2022 to the present day, the S&P 500 index has grown by almost 50%. Over the same period, gold has increased in price by more than 45%, and Bitcoin has risen in price by 3.5 times. It is also noteworthy that all 3 assets represent not only different markets, but also asset classes. Nevertheless, they all updated historical highs. It is difficult to say what exactly allows all these markets to grow, but most likely it is a combination of factors. Firstly, the rapid development of technology and artificial intelligence in particular has allowed large investment funds to invest more actively in technology sector stocks. Secondly, the overall increase in literacy contributes to the fact that more and more households invest in financial markets. Thirdly, professional investors from Wall Street have the opportunity to buy Bitcoin through an exchange-traded investment fund. Assuming that this is the case, professional investors have significantly increased the volume of risky assets in investment portfolios by buying stocks and cryptocurrencies. Therefore, they are forced to hedge risks by buying gold. If you look at the situation from this angle, then everything looks much more interesting. However, we should not forget that capital is distributed very unevenly, thereby increasing the risk of weaknesses, as was the case with Silicon Valley Bank in early 2023. Therefore, professional investors buy gold, trying to minimize the risk in case of force majeure, such as the bankruptcy of a large bank, a construction company, or COVID-19. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.